One of the most common questions I get as the bull market starts cooling off is, what are the whales doing? In other words, where does the smart money go when the hype fades, when the euphoria breaks, and the market starts to turn? Well, today I want to give you a real answer to that. Not just speculation or vibes, but actual behavior measured on chain, tracked across cycles, and backed by tools that anyone watching this video can use for themselves. Because here's the truth. Smart money doesn't guess. It rotates, it protects, and it repositions months before most people realize the cycle has even changed. Let's start with what smart money actually means in this space. We're talking about institutional players, hedge funds, large private wallets, early stage investors, and even protocols themselves. Anyone who holds significant capital and tends to act with long-term intent. After the top of a bull market, you'll almost always see these wallets begin to de-risk. That doesn't necessarily mean panic selling. Often it means quietly reducing exposure to volatile altcoins, rotating into stable coins, moving Bitcoin and Ethereum to cold storage, or exiting into fiat. So let's have a look at what this looked like in the last cycle. In the weeks following Bitcoin's all-time high in November of 2021, over 200,000 Bitcoin, worth over $11 billion at the time, was transferred from active wallets into cold storage or institutional custody solutions, according to data from Glassnode. That's not retail behavior. That's long-term holders locking in gains and stepping back. Simultaneously, we saw stablecoin supply surge. In December of 2021 alone, over 10 billion USDT and USDC was minted, most of it flowing into exchanges. That's not for buying the top. That's capital rotating to the sidelines. When you see stablecoin supply growing while prices are stalling, that's your first clue that the big players are hedging. Now, let's talk BTC dominance. Historically, Bitcoin dominance rises when risk appetite fades. At the peak of altcoin mania in early 2018, Bitcoin dominance had dropped below 36%. But by the time the bear market was in full swing, it had recovered to over 70%. In the 2021 cycle, we saw dominance dip to about 39% during alt season, but as the market rolled over, it steadily climbed back above 48% and continued climbing into the 2022 bear market. So, what does this tell us? When smart money rotates out of risk, they go back to Bitcoin. It's the most liquid, most resilient asset in crypto. And when even Bitcoin starts moving to cold storage or off exchange wallets, that's a sign they're not planning to touch it for a while. So let's talk about how you can see this happening in real time using on-chain tools. One of my favorite sources is Look On-Chain. This is a free analytics platform that highlights wallet movements from whales, institutions, and early token unlock recipients. Look for wallets labeled Smart Money or Whale Trader. You'll often see alerts like Wallet X just deposited 5 million USDT to Binance, or Early Investor Wallet moved 1 million tokens to a DEX. These movements often precede price shifts. Another great tool is Arcam Intelligence. Once you create a free account, you can search wallets by label, view recent transactions, and track net flows for large addresses. For example, if you search a known VC wallet, you can see if they're distributing tokens they received in a seed round, or if they're buying back in. Arcam also offers alerts when tracked wallets move funds, so you can monitor smart money in near real time. Nansen is another premium tool that provides wallet labeling, smart money tracking, and token holder analysis. It gives you dashboards like Smart Money Token Holdings, where you can see which coins are being accumulated or dumped by high-performing wallets. It's a great way to cut through the noise and see where conviction really is. As always, actions speak louder than words. And then there's Glassnode, one of the most comprehensive platforms for macro-level on-chain data. Glassnode lets you track Bitcoin and Ethereum balances on exchanges, long-term holder supply, stablecoin supply ratios, and realized profits and losses. One metric I always watch is exchange net position change. If large amounts of Bitcoin are flowing off exchanges, That typically signals accumulation or long-term storage. If they're flowing onto exchanges, it may mean those coins are being prepared for sale. Another one to track is the SOPR, Spent Output Profit Ratio. When the SOPR is above 1, holders are selling at a profit. When it drops below 1, they're realizing losses. Watching how this ratio trends over time can help you understand whether smart money is exiting profitably or just trying to stop the bleeding. So, where does smart money actually go when the cycle turns? First, they go into liquid safety. That usually means stablecoins like USDC or USDT or even tokenized treasury products. Capital preservation becomes more important than chasing yield. Second, they go into Bitcoin and Ethereum, especially for cold storage. These assets have the most liquidity and the longest track record of survival. Even institutions that don't want exposure to DeFi or newer altcoins often hold Bitcoin and Ethereum for the long-term thesis. Third, smart money often goes off-chain. They start allocating into early-stage deals, venture rounds, or private equity tied to blockchain infrastructure. They look for the next narrative before it's obvious, whether there's a new layer 1, a breakthrough privacy protocol, or real-world assets coming on-chain. And finally, they go into observation mode. They track new developers entering the space, growth in network usage, and signs that a new narrative is forming. They stay involved, but they don't overcommit until the macro and market structure support another run. So, what can you do with this information? Well, you don't need to be a whale to think like one. You just need to start asking the same questions. What is this market telling me? What are the smart players doing? What can I learn from where their money is flowing? Use Look On Chain to see how early investors are moving. Use Arkham Intelligence to track wallets tied to projects you're invested in. Use Glassnode to watch for shifts in exchange flows and holder behavior. These tools give you the ability to spot trends before they hit your newsfeed. And remember, smart money doesn't get emotional. It doesn't chase tops or try to call bottoms. It rotates, it de-risks, it lives to fight another cycle. And if you want to be here long term, that's exactly the mindset to adopt. Let me know in the comments, are you starting to notice capital rotation happening right now? Have you used any of these tools to track wallet flows or liquidity shifts? And if you want to learn how to use them in real time, step by step, check out learningcrypto.com. We'll show you how to think like smart money, even if you're just starting out. Thanks for watching. I'll see you in the next video.